hard to draw too many conclusions from Uber as in one company in one point of time where they did go out and go public at what was a really tumultuous and is a really tumultuous time in the market. But overall, I think we're seeing a story play out where companies that are burning a significant amount of capital and aren't as capital efficient, investors are reacting to that and are saying, hey, we really like growth, but we like efficient growth, and they're looking to see more of that efficiency. So on the other hand, you see companies like Bessemer's own kind of PagerDuty and Pinterest, which have fared much more favorably in the public markets. And I think some of that is a reaction to the fact that they have a bit more of an efficient growth story, and it's easier for investors to see the path to profitability and long-term cash flows.
Does this reset valuations across the board in the Valley?
I think it's going to take some time for that to really happen. Typically, we see a lag of about 6 months for public markets to really impact the private markets and to have that sentiment trickle down. So what's happening right now, it's really, this has been just a week, a short-term period. But if this continues and multiples re-rate over the next few months and that becomes the new norm, I think that'll start to have an impact.
So,
how much?
Go ahead.
You blame Softbank at all? I mean, we keep talking about this Softbank effect. They're pumping so much money into these late-stage companies and inflating valuations. Are they at all to blame for what we've witnessed out there? It's like an arms race fueled by essentially one huge player.
Yeah, it's hard to point fingers at any one, fund or cause, but I think Softbank has certainly made it much more possible for some of these companies, and particularly ones like Uber that are in really competitive markets and are kind of going after huge opportunities from ride sharing to food delivery to transportation, and are giving them war chests, and they're spending those war chests in order to capture market share and to win. And so I think that impact, that is shown in the cash burn of some of these businesses. And it's also shown in the reality that private companies are now staying private for much longer and are going public much later. So some of the growth that historically would happen in the public markets is now happening in the private markets.